Well, first up, I mean, we saw those numbers out of housing finance yesterday. It's reported that it's registered a growth of 57% in profit for the third quarter. Market reaction to those numbers released?
At the moment, we've seen the counter getting better trading. It opened at 14 shillings 50 cents. It's already gone up around 2%. I mean, we expect the market to really react well to the results because 57% growth in such a time when most other banks, as much as housing finance is mostly in the mortgage industry, have reported flat results. It's a good thing, and we expect the market to react very well.
Of course, we've seen the company attributing this performance to innovation, loan disbursements, lower cost of funds as well. But what really stands out in that company release is lower non-performing loans. What are they getting right in terms of controlling their NPLs when so many of the banks in Kenya and globally are really struggling to get non-performing loans lower?
It's true, Alishia. Their net non-performing loans went down by 10%, which is a very good thing. Management attributed this to cautious lending, and we can say their risk management is doing a commendable job. Really, I can say their target markets, the middle income earners and lower middle income, they've really tried to extend quality loans, and we can say the risk management are doing a good work in extending the cautious loans. So it means really they've been cautious, and it's paying off.
Just let's look at their competitive strategy and the environment they're working in. I mean, who are their major market competitors right now?
In fact, we saw S&L, which is fully owned by KCB, also announced its third quarter results, which was also very commendable. We saw their profit before tax also go up by around 127%. I mean, this can be attributable to the nature of the Kenyan mortgage industry. Housing in Kenya is really under. Kenya is considered to be one of the underhoused countries. So really, that's why we're seeing S&L, the likes of housing finance, really register good results. So and their target market is the middle income earners and low middle income earners. As both management talked about moving strategy from the high-end market to the middle income earners. Really, I can say that there is where they've seen the growth, and the fact that the Kenyan market is underhoused. They've capitalized on that, and there is where their growth is coming from.
So that strategy paying off for housing finance right now, but it's also mentioned plans that it's diversified into commercial property financing as well to grow its revenue base even further. What have you made of this new strategy?
I'm not very bullish about that strategy, considering that all companies now, they're keen on cost reduction, and they're cutting down on costs. So really, I don't see major growth there. Personally, I think what they should capitalize on is getting more of middle income earners and the the middle income earners and the low middle income earners on board. They try drum interest for all those kind of people to get in, because you can agree with me, most companies, they're not very keen on incurring more costs. They're keen on cost cutting. So really, I don't see more growth there as opposed to their current strategy now.
Well, certainly you say the market is certainly there. It's estimated that while a total of 150,000 housing units are required annually in the urban areas to actually cater for a backlog, only about 35,000 units are developed each year. Having said that, we've got Kenya's property market players positioning themselves for a new investment opportunity. We've got the government about to open the floating of property shares on the stock market. What do you anticipate uptake to be like on that front? Introduction of rates in this market is, I guess it's long overdue, because
from the results we've seen from S&L and housing finance, there's the growth area. That's where growth is. But as you can agree with me, real estate is capital intensive. Not everyone can be able to raise the funds to get into real estate. So by introduction of rates, they reduce the costs. Everyone can be able to participate in this kind of investment. So I guess what the government is trying to do is a good thing, and it should it will receive good market reaction the moment it gets going.